Welcome back to the Dividend Diplomats channel, everybody. You got Lanny and Bird here, the Dividend Diplomats, and we are excited to bring you another great video about the wonderful world of dividend investing.
Smash that subscribe button, give Bert and I a thumbs up. We're here to talk to you about one of our most favorite videos here to put out there. It is going to be the dividend stocks to buy for the upcoming month of October 2020. And we'll showcase you 3 dividend stocks that we are currently looking at.
Yeah, it is all about being prepared, performing your research ahead of time, and being ready to go when that moment strikes. That is why every month the two of us put together a watch list. We do our research. We stay up late finding those undervalued dividend growth stocks. That's why we are here today filming them and bringing them to you.
So obviously we do this on a monthly basis. Why? Because the market changes throughout the month. You never know what the Mr. Market's going to bring. Obviously the market has had a tear since the beginning or middle of March, but actually once September hit, the market has slid just a little bit, around 2 to 3%. So with that, new dividend stocks to buy opportunities come up, and we want to be all over the metrics to be able to bring you what stocks may look undervalued right now for your dividend stock portfolio.
And we use the same method for finding undervalued dividend stocks. I'm sure you're familiar with us talking about it. We use the Dividend Diplomats Dividend Stock Screener. It's just 3 simple metrics that we run every time to find these undervalued dividend stocks to research further. The metrics are the PE ratio less than the S&P 500, dividend payout ratio less than 60%, and a history of paying a dividend, growing your dividend, and a dividend growth rate.
And at first I thought Bert was going to say the 3 faces of Foley. Mankind, Cactus Jack, and Dude Love. But thank God we are not talking about the 3 faces of Foley or the 3 faces of Bert right now. But we cannot wait to talk to you about the 3 dividend stocks to buy that meet these Dividend Diplomat dividend stock metrics. And we cannot wait to help you on your journey to financial freedom.
So Lanny, let's kick this off. Who's the first company on our stocks to buy list?
We're going to start things off with a Dividend Aristocrat. And as a reminder to the viewer, a Dividend Aristocrat is a company that has increased their dividend consistently for 25 plus years. So the first dividend stock on this watch list is General Dynamics, ticker symbol GD.
Yeah, currently trading around $143 per share with a projected earnings of close to $12 per share. General Dynamics has a PE ratio of 11.9, so it's just under 12 times X. We mentioned that we use the broader market when comparing companies for signs of undervaluation. The S&P 500 is trading at, get ready, are you sitting down? Their PE ratio is 28.5 times earnings. As we said, the stock market has taken off this year since the pandemic kicked off. So General Dynamics with a PE ratio of 12x is significantly lower than the current market.
And luckily with General Dynamics, again, a little bit more about them. They're in that defensive, aero defense as well industry. They're battling for contracts on a go-forward basis, typically with Lockheed Martin, which is ticker symbol OMT. And, you consistently see them winning these deals. So their cash flow and earnings has been very strong and consistent. And with that, they pay a dividend of $4.40, and the dividend payout ratio is actually below 40%.
Oh, that's really low. That's a lot lower. Every time we hear it, I get surprised because I expect it to be higher.
Right, you expect it to be higher because their dividend yield is actually almost 2 times the stock market or the S&P 500. General Dynamics dividend yield is actually over 3%, sitting at 3.08%.
Yeah, that is nice, especially with the yield on the market decreasing with the S&P increasing. So you're getting a nice premium to purchase shares of General Dynamics at a discount compared to the broader market.
And you already know the dividend growth rate here on GD. First, the growth rate in itself over the last 5 years is pretty much at the double-digit mark at 10%. But the best part about their dividend growth is the history. And how many at least years have they done an increase?
At least 25 if they're a Dividend Aristocrat.
So as being an investor with General Dynamics, you feel so comfortable knowing that not only are you receiving that dividend check to a tune of a 3+% yield, But year after year, that dividend income stream is going to grow at an above average dividend growth rate.
Yeah, so let's move on to dividend stock number 2 on our stocks to buy here in the coming month. We're going to we'll move out of the defense sector over to the technology sector. We're going to look at Cisco Systems, ticker symbol CSCO. It is one of our favorite technology stocks that pays a dividend. The company is a giant in the network security, and they've become a huge part of our daily lives with their WebEx platform, with companies moving, having a lot of video conference calls, with schools working remotely. Cisco becomes more and more ingrained in our day-to-day life.
Obviously, they're facing a little bit more stiff competition in the space, from the likes of Microsoft and Zoom, but Cisco is a little bit more than that with the network security infrastructure that they have. And again, we put out the new video of our, favorite technology stocks that pay a dividend, as Bert mentioned. But what do they look at right now from the Dividend Diplomat Dividend Stock Screener? Well, they actually have a price to earnings ratio below 13 based on those earnings projections. And they're trading at below 40 actually right now. So Cisco at under 40 is definitely a great price to look at if you're interested in buying Cisco stock. I think it's a great stock to buy, but obviously that's just my personal standpoint.
No, I agree, because I've been buying shares as well over the last few months in small doses, and you can bet that Cisco is going to be on the top of my list too to continue buying, especially now that their price is below $40 per share again.
And again, you want that safe dividend. We saw with General Dynamics that dividend payout ratio is below 40%. So with Cisco, you don't get anything too much different. In fact, their dividend payout ratio is still below 50%, and they're in that sweet spot of 40 to 60%, Bert.
Yeah, we love that 40 to 60% range because it's the perfect balance of a company using their earnings to reinvest in the business while also paying shareholders a very nice dividend as well. So with a dividend payout ratio of 46%, Cisco is right smack in the middle of that sweet spot. It's a great dividend payout ratio in our opinion.
And they're heading on 10 years of dividend growth, which is phenomenal for a tech company. They've recently increased their dividend. It was a modest increase earlier this year, but at least they did not announce a dividend cut like other dividend stocks had done this year. So that their dividend growth, more than likely going forward, is still going to keep rolling.
Yeah, and Cisco's dividend yield is about 3.6% today, so higher than General Dynamics. And we mentioned earlier, General Dynamics, how that's a huge premium to the market. Cisco's an even better premium today.
Are you ready now? This is the third dividend stock to buy this month, one that we are watching closely, and it's one that we have talked about, over countless videos, countless blog articles. It is AT&T, ticker symbol T. This is a company that, is one of our what, Bert?
Our top 5 foundation stocks for your portfolio.
That's right. I'm going Booker T on that. There's no wonder there's a T in his name as well.
And if we talked about loving General Dynamics yield, we talked about loving Cisco's yield. I think we're going to also love AT&T's dividend yield because their dividend yield is almost 7.2% at the time of this video.
Goodness. Dividend yield over 7.2%. And when we look at the Dividend Diplomat stock metrics, that price to earnings ratio is insanely low at below 9, which you rarely actually see in those single digits. And actually, their stock price has relatively remained unchanged over the last few months.
Yeah, AT&T stock price has just hovered between this high $28 per share to $31 per share range. And personally for me, I've just been scooping up 1 share, 2 shares, 3 shares at a time as the company fluctuates in and out of this range. And it's been able to help me lower my cost basis in AT&T. Now, one of the questions I would have too is if you're paying such a high dividend yield, wouldn't you have a very high dividend payout ratio as well? That's one of the things I love about AT&T. Using their forward earnings of $3.22 per share, AT&T's dividend payout ratio is only 65%. Sure, that's a little higher than the 60% threshold we use in our Dividend Diplomats dividend stock screener, but it's not that much higher. In fact, it's just barely above. I don't lose sleep over the fact that their dividend payout ratio is slightly above that mark. There's still plenty of room to go before they reach the 100% mark.
To really talk about AT&T with those beautiful dividend metrics, we're talking above a 7% dividend yield. We're talking a below 9 price to earnings ratio. And a little bit on the higher side on the payout ratio of 65%, but with over 30 plus years of dividend growth, their growth rate's more than likely going to stay at around the 2% mark for the foreseeable future if we're lucky.
I do not see a situation where AT&T is going to increase above that normal 1 cent increase in their quarterly dividend until their debt load pays down.
So the only question I have for you is, can you dig it, sucker? Sorry, we just had to throw that out there. Give a shout out to Booker T. We'll leave a big reference for them below for the shout out there.
Yeah.
So that was 3 dividend stocks that we are watching right now. 3 dividend stocks that you can buy if you'd like to here for the upcoming month of October 2020. You know, again, we like to be on the forefront to provide you undervalued dividend stock opportunities that both Bert and I am looking at. You know, I continually revise my watch list because times and prices continually change. I know I'm a frugal guy, so I love to buy when stocks are on sale. And these are 3 stocks that I find are currently priced at a discount.
Yeah, so these aren't the 3 stocks that are only trading at a discount. We probably could have had a lot more on here. So please also leave the stocks you're watching in our comment section below, so the community can see all the dividend stocks that everybody's watching. The more can't hurt.
Please leave your feedback below on the 3 stocks that we've discussed here. Leave your questions as well. We're here to help you on your journey to financial freedom. Please like this video if you enjoyed it. Please subscribe to our channel so that you make sure that you get our new videos as soon as they come out or are released. This is Bert and Laney from the Dividend Diplomats.
Over and out.